Welcome to the Deep Dive, your shortcut to being instantly well-informed. Imagine a world where, more lives are saved because we figured out how to keep donated organs viable for longer.
That's a huge challenge.
Exactly. And that's the challenge TransMedics Group, ticker TMDX, is tackling. So today, we're doing a deep dive into this commercial-stage MedTech company. Our mission, really, is to unpack what makes their journey so important, but also, well, pretty complex. We're using financial data, analyst reports, recent news, the whole picture.
Yeah, trying to give you a comprehensive understanding of their business, their finances, and where they stand in the market right now.
Okay.
And the goal isn't just what TMDX does, right? That's why their story is so compelling in the current market.
Right.
It really highlights this paradox of innovation. You've got amazing tech, fast growth, but also facing some really significant, maybe even existential challenges.
Okay, so let's unpack that core innovation first.
Yeah.
TransMedics Group, they're really singularly focused on transforming organ transplant therapy for end-stage organ failure patients.
And the heart of this is their main product, the Organ Care System, or OCS.
Right.
And this isn't just like a fancy cooler. It's a portable system that actively perfuses the organ.
Yeah, it pumps a solution, oxygen, basically mimics blood flow.
Keeps it warm, metabolically active, replicating near physiologic conditions outside the body. It's kind of like life support, but for the organ itself.
And what's really transformative, I think, is how this OCS system tackles the big limitations of just packing an organ on ice, the traditional cold storage method.
Which limits time windows and usability, right?
Hugely. Cold storage restricts how long an organ is viable, and lots of potentially usable organs just get discarded. OCS changes that equation.
Okay.
You see it with the OCS LU and G,
Yeah.
used for preserving donor lungs, especially for double lung transplants.
Uh-huh.
Then there's the OCS heart. This one's fascinating because it doesn't just preserve, it allows for ex vivo reanimation. Meaning they can essentially bring a heart back to a beating state outside the body.
Which is critical for DCD hearts. It's donation after circulatory death.
Right.
It lets doctors assess and even revive organs that previously wouldn't have been considered usable.
Opens up a whole new pool of donors.
Exactly.
Yeah.
And similarly, OCS liver works for both standard DBD and these DCD donor livers. It just expands the number of usable organs significantly, ultimately saving more lives.
That's a huge impact. And just quickly, the company background, founded in '98, based in Andover, Massachusetts, and about 728 employees currently. So, decent size operation for this specialized field.
Definitely.
So that's the core tech. But innovation, as we know, is only part of the story. Let's switch over to the financials because TMDX has been on quite a ride here.
Yeah, it's been dramatic.
We're talking about really significant revenue growth. Just look at the annual figures. $13 million in 2018. Projected to hit $442 million in 2024.
That's quite the curve.
It really is. And even recently, Q1 2025 revenue came in at $144 million. That suggests more than just growth. It points to, real market uptake of the OCS.
And connecting that to the bigger picture, maybe the most critical financial development is that TMDX actually became profitable this year.
Right, which is a huge milestone for a growing medtech company like this.
Absolutely. So looking at their latest numbers, the trailing 12 months, revenue's nearly $500 million, US $488.23 million. Earnings are almost US $49 million.
Okay.
And they've got a solid gross profit, about US $290 million, which gives them a gross margin near 60%. Net profit margin is just over 10%.
Pretty healthy margins.
They are. But given everything going on, that upcoming Q2 earnings report, July 30th, 2025, that's going to be really closely watched. It'll give us clues about how these external pressures might be affecting things.
Yeah, definitely one to watch. And analysts, well, they're highlighting some potential rewards for investors, aren't they?
They are.
Things like the stock trading maybe 60% below what they think is fair value. Plus, earnings forecast to grow over 25% a year.
Yeah, 25.55% per year, specifically.
And a strong consensus that the stock price could rise about 30%. That sounds, well, very positive.
It does sound very optimistic, which is why we need that balance, looking at the risk side, too.
Okay, so what are the flags there?
Well, our analysis points to a couple of things you need to keep in mind. First, a high level of non-cash earnings, meaning a chunk of that reported profit isn't actual cash hitting the bank account right away.
Okay, so paper profit versus cash flow.
Kind of. And second, maybe more critical, is the debt situation. Their debt isn't well covered by operating cash flow. The debt-to-equity ratio is really high, 191.5%. That means they rely heavily on borrowing, compared to their own equity.
Which makes them vulnerable.
It can, yeah.
Yeah.
Especially since their day-to-day operations aren't generating enough cash to comfortably handle that debt load. It's a significant point of caution that contrasts sharply with that shiny revenue growth story.
That's a really important distinction. Okay, so shifting to how the market actually perceives TMDX. It sounds like it's been, well, turbulent. A Barron's.com piece called it a roller coaster ride.
That sounds about right.
As of July 25th, the close was $108.12, but look at the range. A 52-week high way up at $177.37 and a low down at $55.
Wow, quite a spread.
Yeah. Performance-wise, down about 16% in the last month, but up almost 15% over 3 months. Zoom out further, down 23% over the past year.
Ouch.
But then 3-year return is over 200%, and 5-year is like 537%.
So huge long-term gains, but a really tough recent year.
Exactly. And it actually underperformed both its sector, U.S. medical equipment, and the broader U.S. market over that last year.
Interesting. So diving into what analysts expect going forward, the consensus target price right now is about U.S. $141.75.
Okay.
But there are sort of competing stories here. The main consensus narrative, targeting around $140, is pretty bullish. It hinges on their next-gen heart and lung programs, driving deeper adoption in 2025.
Fueled by logistics expansion and clinical programs.
Precisely, leading to more transplants, more revenue, better efficiency.
Mm-hmm.
Then you have the really high target, $170. That narrative focuses on the bigger picture. Aging population and medical technology advances will expand transplant markets. Basically, positioning TMDX for strong multi-year growth and grabbing more market share through investments and new uses for the tech.
Okay, but then there's the flip side.
Right, the low target narrative.
Yeah.
That one sets the price at $80.
Big difference.
Huge. And the title sums it up. FDA trials and logistics expansion will spark mixed outcomes. This view flags increased scrutiny, potential hits to their reputation, rising costs, and just how dependent they are on the FDA.
So massive potential, but also some very real significant risks baked in.
Absolutely. And another number worth mentioning is the PE ratio. As of July 25th, it was 79.46.
79, that's incredibly high.
It is. It means investors are paying almost 80 times the company's annual earnings per share. It signals extremely high expectations for future growth.
And if they don't meet those expectations?
The stock could be really vulnerable to a sharp drop. It shows how much future success is already priced in.
Yeah, that PE definitely highlights the pressure. Okay, let's talk recent developments and challenges. Because there was news that sent the stock up, and then some extremely serious allegations surfaced.
Right. Back on May 9th, 2025, they reported Q1 earnings and revenue that beat expectations significantly.
And the stock skyrocketed, as reports said.
Yeah, the market loved that performance beat. But this raises a really difficult and troubling point about the legal scrutiny they're under now.
Okay.
As groundbreaking as the OCS is, the company is facing a wave of class action lawsuits. These started popping up in April 2025 from firms like Huggins Berman, Levi Krasinski, Scott plus Scott.
What are the allegations?
They're serious. Securities law violations, fraud, and quite shockingly, accusations of organ trafficking.
Organ trafficking. That's incredibly grave. What's been the fallout?
Well, it certainly had a major impact. Reports indicate that as a direct result, the company's shares are down 60% from class period high. Now, it's crucial, obviously, for you to remember, these are allegations and lawsuits. They aren't proven facts. The legal process is just beginning.
Right, innocent until proven guilty.
Exactly. But the market has clearly reacted strongly to the potential implications of claims this serious.
And adding to this whole complex picture, there's been some insider trading reported too.
Yeah, there have been several sales reported by company officers and directors, the CEO, Waleed Hassanan, a director, Edward Basile, the chief commercial officer, Tamer Kayal. These happened through late 2024 and into early 2025.
Often after exercising stock options.
Correct, which is common for executives. It doesn't automatically mean anything nefarious, but it's another piece of data for you to consider amid all this turbulence.
Okay.
So pulling it all together. TransMedics Group clearly presents this duality. You have breakthrough, life-saving technology, and a history of really impressive growth. Their OCS system is genuinely changing transplant therapy. But this amazing journey is happening alongside significant market volatility and these very serious legal challenges. The lawsuits, the stock swings, it makes it a really compelling but also complex case study of a cutting-edge company trying to navigate a very stormy environment.
So wrapping this up, what does this all mean for you, the listener? Given this stark contrast, Analysts talking about huge growth potential from logistics, aging demographics, versus these very real risks around FDA trials and especially these grave legal issues.
Hmm.
How might these kinds of medical tech innovations and the logistics needed to support them actually reshape the whole organ transplant field in the years ahead? And thinking bigger picture, what are the long-term implications for patients, for the healthcare system? Regardless of how TMDX stock performs, it really leaves you pondering the future of medicine, doesn't it? Poised right there between life-saving tech and these really challenging market realities.